Good morning, everybody. Welcome to the Flow Show, Tuesday, 5th of March. Chucking through the days really quickly. Morning, Kay. How are you cooking, mate?
Hey, good morning, Ryan. Good morning, everybody. I just logged in. I forgot the time for a minute there. Yeah, I'm okay, mate. We're ready for the rest of the week, right? We're ready.
Yep, hopefully. Can't get any more ready than this. If we're not, I don't know what we're doing. Starting the data deluge has started already with all the PMIs and bits and bobs this morning, so we shall crack on through that. The China's leaders meeting thing we did going on over there. We've had a few comments out. They're going to target 2024 GDP at around 5%. That's in and around what they got last year, 5.2%. They're also targeting CPI of around 3% this year. That's got to go some guns, considering they're in a little bit of a deflationary spiral at the moment. We get to the next CPI readings on Saturday, which I expected to turn positive by a little bit versus the negative numbers we shall see. They say they're going to appropriately increase the intensity of proactive fiscal policy in 2024. That's technical speak for we're going to pump shitloads of money again this year. China's NDRC, the National Development and Research Committee, says all foreign investment restrictions in the manufacturing sector are to be removed. So trying to entice foreign firms back into their manufacturing. China Premier Li, who's been at the head of announcing all these bits and bobs, says the foundation of China's economic recovery is not solid yet. Says domestic demand is not strong, and calls social expectations relatively weak. So still got a job to do to get their economy moving. On the data front, we had services PMI starting over there in China. I'll get to the Japanese data in a minute. This is the private survey, the bank survey. So that came in a little bit softer than expected, and last month 52.5. It's a little negative number there, but still in expansion. So that's all good. There were rumours that state-backed buyers were lifting their stock market today. Not really a surprise, seeing as they're announcing all these measures and plans and ideas and whatnot. But Morgan Stanley have been out saying that global funds are apparently returning to Chinese stocks. That was in the story. The details of the story are a little bit flaky, though. It may have started returning and perhaps is and all that sort of thing. And the only thing they've cited as picking that reason is that foreign selling has basically slowed. Doesn't mean it's over. Doesn't mean everyone's rushing back in. It just means the selling has slowed somewhat. So I'm a bit sceptical that anyone's going flooding back in. I'm not sure if it's ready to be bottom picked yet, Kay, do you think, in China?
No, I mean, the selling has stopped because probably nobody has anything to sell anymore.
Exactly, yeah. It was flat.
That people are getting back into it, right? And if you look at how the markets are behaving in China, it's anything but encouraging right now. There's not more than a couple of sessions of positivity in there. No, patience, I would say patience. It's not, I mean, yeah, the selling may have stopped, and therefore perhaps the equity markets are going to stop falling for a while. We could also perhaps say that it may stop the big activity for a while during the NPC week, right? Yeah, the SSC is one, but then you've got Shanghai and the A50 and stuff. It's not really ramping higher, but there may be a bit of positivity for the during the NPC week as well. And after they came back from their new year, we saw a bit of revival as well because the rest of the equity markets was going up too. But looking at how The rest is behaving. SpotFX is behaving. There's no signs for the investors to really get back into China yet, right? We should start the effect. We should start to see the effect on the currency as well if people, especially foreigners, start to get back into the country. Of course, the currency may be a bit like we see in the yen, may not be affected by direct inflows immediately because you've got those correlations between equity markets and currencies sometimes. As we see that in the yen, people are hedging their exposure, right?
Yeah.
But in a country like China, with the size also of China, I do think that if investors start to believe in a revival, we should see a bit of impact. But for the time being, I think it's still just fishing and trying to figure out what to say about them from those banks.
Yeah, a bit of a 2 + 2 = 5, in my opinion. But yeah, they're, you know, these flows that have been coming out of China happen over quite a long period of time, a lot of money, and it's not all just going to suddenly reverse and turn around and rush back in again. So, yeah, I'm skeptical of that story. But, you know, stock markets aren't going down, whether they're supported or not. They've stopped going down. So that's always a first sign. It's just whether they can now back it up with their policies that they want to put in place. Right. Coming over to Japan, and some good news for the Bank of Japan. The Tokyo CPI came in round about as expected in pretty much all the measures. Core CPI 2.5%, core 2.5%, matching the prior. CPI itself 2.6%. I think that was a little bit higher than most expectations, 2.5%. So we're back here above, or remaining above target, which is good news for the BOJ. That's a little half box ticked for them, and monetary policy potential ending of easing. We'll see if the national numbers mirror that as well. But this does account for some 70% of Japan's CPI, so it is a big number, and obviously the first numbers for February. Finance Minister Suzuki says,
right. We had this Japanese CPI out last week. Or was that still?
Yeah, that's January. This is February.
All right. Okay. Yeah.
Yeah. The Tokyo one's always the first one of the new month, and then we get the follow up to it. You can call it a leading index, but it's only leading because it comes first. But there you go. Yeah. So Finance Minister Suzuki says there's no truth to the market views that the government may be considering announcing the exit from deflation, neither in sync with the Bank of Japan's negative interest rate decision. So that's quashing that rumour further that we heard from this weekend. Top currency man Kanda said we must brace for a higher interest rate environment, given that the assumed interest rates have raised to 1.9% from 1.1%. Another one, the Deputy Chief Cabinet Secretary, Murai, said Japan is seeing the early signs of achieving a positive cycle of rising inflation and wages. And on that front, PM Kishida is going to hold wage talks with Labour and other companies on March 13th, which is the day we get the first Rengo wage negotiation patter from those guys. He has been holding various meetings over the last few months. His main line here is that you want small and medium-sized companies to hike their wages as well. They account for a big chunk, I think 65-70% of labour is at small and medium-sized enterprises. So that's why they're a big weighting in terms of getting those wages higher. They're also going to double the cap for foreign workers over the next 5 years for skilled workers in mainly the manufacturing, construction and agriculture sector. Thanks for being a farmer, Kay, and heading back over.
A farmer in Japan. That's a bit of a question. I'm not
Be a builder.
Huh?
You can be a builder.
Oh well, I mean they're always busy right over there. They're always busy. Yeah, I don't know. what is sure is that next week we should be well rested for those who want to trade the yen, because that 13th of March is getting bigger and bigger in the calendar, because we not only Ringo, now Kishida putting it on the calendar, but also Toyota said that they would make some kind of a decision on that day. So that 13th is going to be a day or perhaps the 14th, and waiting for the results. But that's going to be one very big day on the Japanese calendar this year.
Yeah, very much so. I'm just trying to see if I can find my old thing to find if there's anything else coming out that day, but I can't find the old screenshot, so I'll have to look it up and see what's what, just to see if there's anything else that was dropping that day as well. No, can't find it. I'll find it in a minute. Right, moving on then, over to the rest of the data. As I said, all the PMIs flooding out. Just keep an eye on this one as well. The ANZ Commodity Price Index in New Zealand ticking up 3.5% from 2.1% previous. That puts a little bit of inflationary pressure in the pipe for those guys in New Zealand. Not that they are looking to hike as per their last meeting. Japan, their services improved over expectations, 52.9, but was a couple of pips down on last month. Already spoken about the Chinese numbers there, so coming across into Europe. France industrial production looking a little bit soggy. Again, that's pretty much mirroring what we're seeing in manufacturing and the like. Spain is going gangbusters at the moment. Decent manufacturing PMI, now decent services number there. So all looking tickety-boo over there for the Spanish. Italy came in as expected, confirming a rise of 1 whole point above last month. France, a little bit of an improvement there, 48.4 over the flash number 48, and better than last month. Maybe next month or two we might see some expansion numbers coming in. Germany as well, they improved over their flash by 0.1 pips there, so 48.3, again improvement on last month. The Eurozone composite as well, or your pan-Eurozone services number, also improving over the flash number by 2 pips. The UK letting the side down really, although that number last month was quite gangbusters, 53.8. It's a bit of a pullback there. The main news out of all these PMIs, particularly for the Eurozone numbers, and we can go back to the CPI data and the manufacturing numbers, is that price pressures are still well elevated and in some cases increasing. And a lot of this is being driven by high wage demands. That's going to be a big factor that the ECB will be looking at for Thursday's meeting. Based on just the price comments coming from all these PMIs, we shouldn't expect any sort of dovishness from the ECB on Thursday. It's going to be jobs not done, long way to go, etc., etc. We have had a sources piece out apparently saying that they're going to reduce their CPI forecasts, so that might be a bit of a counter to what we're seeing from this data so far. We'll wait to see if that is the case. Forecasts expected to come down for this year and next year, which is a bit of a dovish slant. So maybe we got a bit of a two-way trade coming up this Thursday. Kay, got any early thoughts on that in the ECB?
Yeah, depends who the sources were again, Ryan.
Yeah.
If it's the French or the Spanish, they will like the course of Villarroel or the Italian Centennial is probably going to be, we are going to lower the CPI outlook. But if they would have asked the same question to Holtzman, he probably would have said we are going to raise the outlook. I leave that sources piece for what it is, but I agree with you. Lagarde should not yet turn. She's probably going to say work not yet done. And what is also interesting is that, and we saw it in some of those PMIs, although we are still like very, very well below the 50 mark on in the for what the engine rooms are concerned, France and Germany, but she may, and she mentioned something about expecting or seeing some kind of green shoots, a little bit like what Bailey was saying for the UK economy. She may also hide behind that, or repeat that. But yeah, fully. I mean, it's it's not a meeting, I think, where they are ready to turn yet. The data don't show us that they should. There's still price pressures in there. And the economic situation after a very bad spell, of course, is not seemingly not worsening, although we had a weak French IP this morning. Yeah, so it's a bit of a wait and see meeting. Yeah, I
Yeah,
guess we'll talk about the ECB really on when is it, Thursday, right?
yeah,
Um,
yeah, yeah.
yeah. I think there may be some chatter about the PPP and all that stuff, but for the rest, looks like autopilot meeting to me.
Yeah, I think so too. I think so too. And yeah, we are seeing some green shoots, as they like to call it, in terms of activity. But we've had 2 months of Q1, and we've still got contracting numbers. So we shouldn't be expecting any big jumps in GDP coming in for Q1. But they've stopped going down, and they're ticking back up. So the trend at the moment is pointing towards improvement, as long as that's maintained. That's the overall view of the PMIs at the moment. Fed's Bostic, he's been waffling quite a lot. He was out again yesterday saying he would not anticipate that cuts, when they start, would be back to back, but will depend on the response. So he's still expecting 2 cuts this year. They're not necessarily going to come one after t'other. UK Chancellor, we've got all this budget stuff going on at the moment. Apparently, he's going to extend the energy windfall tax by a year, and apparently, maybe going to knock 2p off the national insurance tax that we pay over here on incomes, and maybe something on income tax itself. Again, election year, he's going to find lots of money down the back of the sofa to try and bamboozle the electorate with. Russia yesterday accused Germany of planning to attack its territory. This was after the mess that Germany called by, for want of a better description, had a Zoom chat on security and let the Russians just dial themselves into it and listen to everything. So that's kicked off a thing, but obviously Putin's throwing his weight around, pointing fingers, saying that there are troops of different Western countries active in Ukraine, and Germany is facing the brunt of that. That gave a little bit of a shot to risk. I think yesterday was one of the reasons, why gold's a little bit higher as well, amongst other things. Just something to keep an eye on. It's given Putin a lot of ammunition to point fingers. We all know that various countries have got troops in there, but it's one of those unknown knowns, or known unknowns. No one wants to admit it, but now it's out in the public. And on the US election front, the Supreme Court had ruled that Trump can appear on presidential ballots. That was a Colorado thing that was going on, trying to dismiss him off of that. And I think we've got a load of primaries today as well, 16 odd, I think, which may or may not fully, or pretty much fully, endorse Trump as the running man for the Republicans. So that should be coming later today over in the US. That's it on the news front from me, unless Kay's got some words of wisdom for us.
No, but yeah, you're right. It's Super Tuesday today. People, not the market, the people are expecting that Haley may throw in the towel after those primaries, and if Trump wins the majority of them. So we will have to see what happens to a few for us, to a few currencies that may get a little hammered if Trump really is going to be the one for the Republicans. For the rest, not that much. I was like scratching my head a little bit why especially the Aussie and the Kiwi were weaker, but it seems like the New Zealand finance minister has been a little bit downbeat on the economy. Just trying to find it back here. And they also walked back on the promise to return the books to surplus by 2027. So that's one of the reasons why the Kiwi got sold off again. And the other BOJ, I don't know. Yesterday we failed to break above that 60. 65, 25, 40 once more, and looks like people who are trying to go for a little bit of a break or trying to buy Aussie have got spooked out again, and now we are here around 65, the figure, and going into the US numbers, and that's about it what I saw. And then to comment on Ali's question about euro dollar. That's perhaps a good transition, because from today, this afternoon, we are going to get, well, other stuff as well, but a lot of US data, a lot of Powell speaking as well on the 6th, 7th, and we are going to really have a lot. So the question that you are asking, in which case can euro dollar go higher? I think from where we are here, it's really the dollar that is going to be determining, with the ECB in the middle of it all, of course. But I do think it's really the dollar that is going to be decisive for where every pair is going from, or most pairs are going for the rest of the week. We also have the Bank of Canada, of course, and the labor report out of there. But we've got so many US data out, and we've been talking about that on the show as well, that if we see confirmation of like those orangey flags also coming in, that is what possibly can put your euro dollar higher. Against that, we have to note that the longer we traded in this range that we had, and not even the tight one, 108, 109, but call it even 107, 109, and the vols in the FX option market have absolutely been squashed, and we're still above 5% in the 1 month, but those are relatively low levels. So what happens there is that people find it cheaper to buy options than to put stop losses in place, really, in a way. But that also means that when you go to the edges of the range, because they paid premiums to buy those options, they will be sitting on at the edges of the ranges, and that is a bit of a vicious circle, until we get, and that is a possibility this week, until we get US data that tell us, right, the dollar is in for a move here. So, and then that's going to be your euro dollar move, whether it's up or down. And I'd argue 108 is 107.90, 108 is your new 107 possibly, but still, if the dollar prints strong numbers globally this week, we also don't expect that much from Powell. He's not going to tell us that they are ready to cut rates, that's for sure. But if you would go and see the downside of the range, then look at what the options are doing, because they've been quite well nailing it over the past months in when it comes to range trading in the euro dollar. So we really need the dollar to be on the move here.
Yeah, very much, mate. And Ali, again, that question of what's strong, what's weak, you just have to take it in context with your different time frames. If you look at this, even just the course of this year, in a pretty tight range. So are we strong? Are we weak? Let's go on to a cleaner chart. You want to look at the wider chart. Are we strong? Are we weak? It depends on where you're looking at. But at the moment, we've just got, the market is balanced. Okay, the market right now is balanced between what the Fed are doing, what the ECB doing, what the fundamentals are doing. If it wasn't balanced, then we'd be trending somewhere, but we're not trending anywhere at the moment. So the market is just, it's reacting. It's reacting. What like Kay said, you get a good piece of data at the US later, then we test the downside in the euro. Get a bad piece of data, we test the upside. Whether it's enough to bust us out of all these ranges is another question entirely. So we can only take it as it goes. Yeah, Aussie is a bit of a mover. I'm a bit surprised with that one, Kay, because it's not. You would have thought with gold busting higher and Chinese stocks remaining supported that we'd see this one on the up as well, just from that influence. But yeah, it's looking a bit weak this morning. Just breaking through this sort of area that we've nudged several times before, 64.80s. We're below there, or trying to get below there. If we hold below there, then maybe we get a move on for that 64.50 area again, and those lows down in this traffic zone down here. But yeah, it can all change later.
That's exactly it. I was yesterday. I was. I'm pretty happy because yesterday I actually and late on Sunday night actually I actually bought it because I thought that for a starter of the week for the reasons that weaker US data, the gold ramping higher, risk still doing okay as well. In the meantime, I thought we may have had a look, and then I was well, I was pretty happy to only have lost 7 pips on that trade because as the day went on, it was like kind of clear that Aussie didn't want to go at all, and then Kiwi was also not helping a lot either. Despite cable going up a little bit, euro dollar strengthening just that tiny bit, the Aussie and the Kiwi never ever benefited from it, so I went out of it, and pretty happy I did right now, and then just sitting on the sidelines. And as you say, that 75.80 is, or call it 70.80, 75.80, 80, depending where we end the day after the data today, is going to be decisive. But has to be said that this is now again reinforcing that 65, 25, 40, 45 zone on the Aussie, which in turn, as we have already been saying, because a market rarely sticks to that forever, of course, which in turn a break should perhaps now look a bit stronger if we finally would go for it. So we have that still that zone is now extremely strong, right? So that's a very good level for us to look at. But I wouldn't buy it before it actually goes now. It was just fighting against the dragon, it seems.
Yeah, very much so. It's looking like one of those big pivot levels. I mean, you can trade around this zone, but you just have to recognise when you get these areas of strong support and resistant action around here. You've got to pay attention to them. Not, even if you're not trading them, just note them. If you get to hold above it, then maybe you see some upside. If you get to hold below it, you get to see some downside. But while you're fluffing around in the middle, this is where your decisions are made, above and below that area. Ali, your dollar CAD, you nearly got up to your TP. So you've got to, it's like we were saying yesterday, you've got to look at these levels. You've got to take the price action. You've got to listen to the price action, watch the price action. It was saying that there was trouble up here into 136. I'm not a fan, if people have got profit targets, I'm not a fan of people getting scared out and taking profit too early, okay, because that's not your plan. If your plan was 136 and you're getting out 135.80, that's not your plan. But sometimes you need to watch what goes on. If you've got, like Ali, a 136.06, and you see it up at 136, 136.02, and there's traffic here, if you're taking profit a couple of pips short of your actual target, don't fuss it, don't sweat it. Put someone on, even if you take half off. If you don't think you're going to get all of it, or you're worried about hitting your profit, just take some off. Let the rest ride, and at least if it does pull back, you've put some in the bank. So sorry to hear that you didn't quite get it there, Ali. Next time, you're still in the trade, I assume. So you can have another go, and maybe this time, if it goes up there again, that'll be the the fourth attempt. Maybe that's the time that it breaks, and then you can think about what you do thereafter. But yeah, this is why we bang on about the price action. Don't let these things influence your decisions, or let them influence your decisions rather. You can see that there's that price action here that suggests it's not going above that area, so you can't have your stops and your TPs right on those levels. bring them just below, or in the case of stops, just the other side of it, not right on the levels. But yeah, hopefully that one comes back round for you, Ali. Stocks, George wants to trade. If we're not going to trade FX, he wants to trade. He wants to trade stocks. Let's have a look at stocks.
I think he's right.
Yeah, probably. So we've had this high yesterday evening, which I missed. Unfortunately, I would have liked to take some profit off of there, but another thing's on my plate. This move looks like a little bit of an overextension. So it's no surprise to see, a bit of a sell-off since then. Looks a bit similar to that, bit of a sort of blow-up move, took a few stops, a bit of over-exuberance, if you like, not massive, but enough to put in a bit of a high again. We've got a test of this break area, 51, 51, 12. So that's the first support point to potentially watch. If we hold that, keeps the whole thing going. But then I would expect if we have another test up here, it will start to see a bit of resistance around this 40 area where we've had that prior high. But nothing up here at the moment is suggesting that a top is forming. I want to see price action like this. I want to see price action like this before thinking about tops. So at the moment, we need to look at support, which is here. If we get below there, 51, then maybe we can come a bit wider and we might start to build a bigger area up in this 51 zone. But it needs to take out the support points, which are still very, very short term. So, not enough to hang your hat on at the moment. 50-50 is something to hang your hat on because it's proven over a decent period of time. All this up here, very short term. It's all about watching what's going on. Okay, I'm going to pass it over to you, mate.
Okie dokie.
All yours.
Right. So another thing, I regularly watch these. We had this little move up on the differentials here, which was around January, first little leg up on the euro, then came back. But yeah, we are above the box that we were in since August in the differentials, but we are not really going anywhere. We just moved into the next zone on the euro, and if you look at the sterling differentials with the dollar is exactly the same. If you start to look at what's happening on the sterling and the euro differentials, it's exactly the same as well. So I mean, if you want to know why those three majors are seemingly stuck, I mean, this is one of the reasons as well. And then, as I said, that brings the option volatility down, and that's why we are stuck in these ranges. So we are going to need catalysts to get out of those ranges, whether it be in the euro dollar, whether it be in the cable, whether it be the euro sterling. We are going to need catalysts, okay? And so the catalyst could come this week with the dollar. Ryan already showed that euro dollar. I'm going to have a quick look at the cable. Cable still looks to me, although euro sterling doesn't move much, and we have the budget as well tomorrow on the UK. So sterling could see a bit of double whammies or saloon doors over the next sessions, but sterling is still one that looks to me like perhaps if the dollar shows signs of weaknesses, could have a little move through here. Okay, that's how it just feels to me again. I wouldn't be surprised if it makes that move. It's just I've got really tiny just to have a chip on the table, but nothing really that's going to hurt any portfolios. But this is one that I'm looking at this week because we had this move back down here as well down to 126. And then you have the 50% here around 125.90. I think that's going to be an important level of support now with a bit of an intermediate one around 126.30, 40. If ever the US data start to get weaker, watch what's happening in the 127. Well, yesterday again, we went a little peak above 127, but failed again. But look what's happening in this 0525 zone on the cable. If that would go, I think it may just push through and perhaps back to high 127s or 128s. That's in case the dollar is seeing a bit of weakness. I think in turn, if the dollar shows strength, then we have to look back at these antipodians because they show a bit of yeah, they fail up there, right? So that's just an idea. If the dollar is stronger, those could be the ones, because they are already a little weaker overnight. Those could be the ones that actually make a push, and in that case, Aussie could reach 64 the figure. Kiwi, if we start to break below this zone here around 60-60, 60-50, it could make a move down to 60 the figure. Yeah. Those are perhaps currencies, just because they are behaving that weaker than the rest, that could suffer a little more if we get stronger US data. I'm just trying to pick out the ones that, at least for me personally, that I like more or like less, depending on how the data come out in the US. This one I'm leaving it alone right now, the rand, but just interesting. Okay, Dolomex is trying to make a move under 17 the figure right now. So as we've seen on those prior primaries for the Republicans, the Trump victory had a bit of a negative impact, but it seems the market is shrugging it off right now. So watch what's happened on the US data, really. Look at this little trend line here, around 1693.94. You got a little bit of here around 1690.92. If that would start to break, then I reckon we can have a peak back down to lower levels, perhaps in the 1680, 1660 zone. If in turn we start to break back above 18, call it 0510, then 17, sorry, 0510, then we should start to push a little higher again. So there's a good combination here to watch on the back of US data and on the back of those primaries for the reps. Okay. Right. Let's get back to what's happening in the Swiss. We are pushing through on the Euro Swiss after yesterday, so that is still relatively positive. Swiss is still undergoing the laws of gravity, getting a bit lower, and this is for those. And now I would just want to make a 1 minute pause. Correlations. We've been talking about that. We've been talking about a lot of correlations as well. We talk about that in the room. A lot of the correlations that we see right now have gone completely out of the window, and one of them is gold and Swiss. Usually when gold ramps higher the way it does, it should be good for Swiss. So this is showing you first of all, a breakdown of correlations. They do break down, they do move at times, but not always. But this is a clear breakdown. What does it tell us is that the Swiss franc is on the weaker footing. That is just the thing that it tells us, right? The dollar Swiss may be a little different. I've already said it yesterday. We are stabilizing here below the 89 the figure zone. Okay, this is your break level, and this is another one where the dollar is when the dollar is seeing better data. That could go for a walk higher if we break above 89. A break above 89 should be significant enough, okay? If we get weaker data, Swiss is perhaps going to move a little less because the Swiss crosses are a bit, but there is a possibility that we get back down to perhaps just below 88 again, and then have a look at 87.60. I think 87.60 is going to be one of those intermediate levels. Okay, there are more levels down there. I think the big one is 85.5, but keep an eye on what's happening at 87.60. That could already be interesting enough if we ever trade again around there on US data. Okay, so you got like 87.60, 89 the figure. That's where it's trading at. I haven't really had any longer term positions, and that's a bit of a pity in this one because also of my view on the sterling. Sterling Swiss is trying to make a move for it, guys. We're back at August 2023 highs. If you see here, this is at the post-COVID high down to low, but this is a subjective low, okay? But still, it's around there, and it's been traded as well. That's around 112.70 sterling Swiss. But I think since the break here, we are. It looks to me that there's a possibility we are pushing up to 114s in this one. Okay, this is what I kind of think that may be the next move. All right, so 111 for the more medium term. This is 111 should be support now. Should be decent support, and then with 110.50 on the underneath there. If those hold, which we saw it did last week. Believe it or not, I was bid just on this MA actually, and I didn't get any sterling Swiss, but I did a bit of revenge trades, but I still don't have like a longer term or real position in it, just scalps and stuff. But I do think there is a possibility that we move up into the 114s at one stage. Again, and I will repeat this until SNB, because Jordan still has the possibility to tell the market, hey guys, this is enough of a retracement, okay? I don't want you to undo everything that we did to combat inflation, right? Even with the inflation ticking down, he may, it's still in the possibilities that he may say, don't undo everything. We are still on both sides of the market, in which case, if you see into the S&B's further Swiss weakness, that's what I'm going to do at least. I will take partials of because I'm mainly in the crosses. I'm mainly in Euro Swiss here. If I see these highs, these ones here from November, September, and if the market undoes those moves from the end of last year, I am going to take partials. All right. Ryan, really, we could continue for today. I think that's enough for me.
Yeah, thank you very much, mate. Good stuff as always. Getting us all up to speed on what's going on in markets. Yeah, the ISM is going to be the big number this afternoon. Keep an eye on that one. Expecting a little pullback to 53 from 53.4. Manufacturing had a bit of a wonky one last week, so let's make sure to see where that happens or not. Again, keep an eye on the prices paid and employment components. Inflation obviously important, as are jobs this week. Thank you very much, everybody, for coming and supporting us here at the Flow Show, giving us your eyeballs and your comments. Have a great one. We'll see you tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.